What in the heck is going on with the Sarasota Manatee County real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group. Every single month, we take a look at the month over month and year over year stats, dive into a granular level on nine key metrics of the real estate market here in Sarasota and Manatee counties. We'll look at it month over month, we'll look at it year over year, and if statistics aren't for you, this video might not be your jam. However, if you intend on moving anytime in the next 12 months, pay attention because these are the statistics that can leverage your best move possible. So if you want to sell for the highest price, if you want to get the best deal on a purchase, you want to do both in the same exact market, stay tuned to the end because we'll talk about how to use this data to your advantage. All right, so if you watched these before, you'll know that when I'm looking at month over month and year over year, if any particular metric moves in favor of sellers, then that metric's coded in or color coded in green. If it moves in favor of buyers, it's color coded in red. So this month, no huge, massive swings in any direction. So I'm just going to take it from the top, starting with average and median market times, average days on market, median days on market. And to me, I think those numbers are kind of a farce because so many listings spend so much time at the wrong price. And when you really look at a lot of markets, by the time a listing hits the price that causes it to actually sell, the actual price that the buying pool reacts to the time it goes under contract, it's literally days in most markets. But anyways, on average, for the homes that went under contract last month in April, they spent an average of 81 days on market. Median's only 49. Both of those metrics are down month over month. It's actually the fifth straight month that the average days on market has been trending downward. New listings reduced by 6%. Kind of a seasonal thing as more snowbirds leave, but also, something to pay attention to. If listings drop, then sometimes the total inventory or amount of homes on the market can drop too, which is the case this month as well. Total inventory down nearly 3%. For the second straight month, the number of homes did fall. All right, this one actually kind of took me a little bit off guard. Is new purchase contracts fell by 7% in April, which is kind of surprising to also see closed sales fall by a little over 2% in April, especially given that last month contracts were up 11%. You figure the contracts that were written in March, most of them close out in April, save for like new construction or maybe longer time horizon type transactions. But contracts up last month, down this month, closings down this month. What is up again for the third straight month is the average selling price. This only measures the homes that closed in April compared to the homes that closed in March, but a 7.2% gain in average selling price up to almost $645,000. Median price, that went the other direction, down 1.2% from 415 to 410. And finally, this number here, this leverage factor, what is the median selling price, what these homes are closing for, compared to the last final asking price? That spread grew, or the percentage itself fell by 0.3%. That means that the median home is selling for 3.5% under the final asking price. And that doesn't even count any concessions towards, closing costs or inspection items or anything like that. That's just the headline price. So what does that look like year over year? April this year compared to April last year? Well, buddy, it's a whole lot of green. So I don't want anybody to, or if somebody talks to me about the impacts that geopolitical challenges in the country right now are having, or in the world, I should say, are having on the real estate market, it's a nothing burger. It literally has nothing to do with the real estate market except for the volatility of bonds driving mortgage rates higher. That's the only impact that the war in Iran is having on the real estate market, at least from what we can tell now, 70 plus days in. But anyways, year over year, again, a whole lot of green. The only metric that moved in favor of buyers is the average market time is literally only 2 days longer than last year. Meanwhile, the median market time is 3 days shorter than April of last year. Why is that good for buyers? Well, more time to, think about a home, more leverage if a home's been on the market a little bit longer. Those are things to consider. All the rest in the green. Median days on market I already touched on. New listings down 12%. Headline numbers down 401 less listings in the month of April this year compared to last year. Don't have data on what was available last year, so that one's actually technically in the yellow. New purchase contracts, check this out, up 20% year over year. Closed sales up 6% year over year. I'm sorry, I meant 19% on contracts, not 20. But still, that's a big jump. Average close price up 14% year over year. Yes, the average can be heavily influenced by some big sales that did happen in the month of April, but the median selling price is up 1.5%. And if you've watched these videos before, we've been largely talking about decreases in median selling price year over year. So first increase in some time. And then finally, the median sold price to list price ratio, while down month over month, is up almost a full percent year over year. Longer term, what does that look like? So here we have graphs for much of these metrics that go back to October of 2024 is when we started this. So nearly, 3 years worth of data. We'll call it 2.5 years worth of data. And I'm going to start with market times, average in the blue, median in the red. Largely, yes, a little bit of an upward trajectory over the last 2.5 years, but largely pretty dang flat. This one is a biggie. This is obviously from a data standpoint, it's huge. There are 3 different metrics, but this can explain the real estate market and how it feels to some people perfectly in a nutshell. So what we have here is you got the total amount of homes that are available that's measured on the 1st of every month in the red. You have the number of new listings each month in the blue, and you have the number of new purchase contracts in the yellow. So here's what happens. Obviously, for the duration of measuring this, and this would have looked way different in the COVID market, but for the duration of this, there's been a huge gap between how many homes are for sale and how many go under contract every single month. Roughly 15 to 20% of the total inventory goes under contract every single month, which if no new homes hit the market, eventually that red line, that total inventory gets gobbled up in 5-6 months, something like that. However, new listings do hit the market and push some of the would-be contenders out there just off the grid, off the buyer's radar. So you have this stacked inventory that's kind of in no man's land, and roughly half the homes that hit the market don't actually sell. Either, I won't get into reasons, but if you're a seller out there, your home's been on the market a little while and it feels slow to you, well, it's because you're in this gap between the red and the yellow lines. You're in no man's land. Your home is not positioned to attract attention. And that would be why. Meanwhile, there's other sellers who are experiencing COVID market-like symptoms, if I may, where they're getting multiple offers. The price is going up. All depends on your selling strategy. And that's something we can talk about offline. Closed sales. You can see earlier in the year, there's a massive jump that took place between February and March. March was a huge closing month. It was last year too, just not to the great, to the extent that this year was. So we're likely to see that tail off, much like the same pattern that we saw last Q2, quarter 2, April, May, and then June, and then it starts sliding into the summer and early fall months, and then picks back up again towards the beginning of the year. Just seems to be at a higher scale. Average and median selling price. Well, those are flat. And then median sold price to list price ratio. You can see it's kind of bounced around anywhere between 95.5% and 97.5%, with this month being no different. So there you have it. Now, to put this data to work for you, if you've yawned through this entire video, there are ways to work this data in your favor when you are making a move. Whether you are selling a home independently of buying another one, you're buying a home independently of selling another one, or you're doing both at the same time, first of all, this is a huge 2-county area worth of data that we're collecting. Not every market inside those 2 counties works the same. So you want to work with somebody, a professional who can pull this kind of data, this level of data for the specific target market that you're looking at, whether buying or selling a home or both. That's the best way to put this data to work for you. So there you have it. Sarasota Manatee County's Market in a Minute. Appreciate you watching. We do this every month. Stay tuned. Make sure to subscribe for more, and we'll see you next month.